If you think of the Pokemon market as one of those hydraulic press videos, we've seen diminishing demand and a growing supply putting a lot of pressure on prices for just about everything. Whether you like modern singles, sealed product, or graded slabs, the squeeze is here in 2024. I'm Pokemon Classics, and I invite you to join me for an in-depth look into today's Pokemon market. Hey everybody, what's up from Pokemon Classics, reminding you that the classics never go out of style. Today in this video, we're talking about the squeeze. That's right, the squeeze is here in 2024, and it's primarily an issue of supply and demand. Now in this video, we're going to be focusing on market saturation, which is really more of the supply side of the equation, but whether it's the overprinting of modern leading to a devaluation of modern single prices, as well as an over-plentiful supply of booster boxes available. But it's not just modern. This is also true of graded slabs, which are seeing some of their greatest numbers of graded cards ever seen before, putting pressure on all areas, pretty much all avenues of the Pokemon market. Now, one of the things I want to emphasize in this video is that there is hope for improvement as we go through 2024. And this happens to be a critical phase as we establish or reestablish the market stability that we've kind of been missing for the last few years. As all of these items hit the market and all the saturation is there, eventually we will lead to established values and a return to fundamentals. At least I think so. But anyway, let's take a look at some of the saturation. In fact, to put this into better context, let's take a look at the modern production numbers over the last few years. Now, just last year in the fiscal year 2022 to 2023, Pokemon produced 9.7 billion cards. That's 0.6 billion more than last year and almost 3 times as much as the year before that. Now, this production level translated to 18.3% of all Pokemon cards ever produced happened to be produced last year alone. Now, think about that for a moment. That's 1 in every 5, or roughly 1 in every 5 Pokemon cards in the world was printed just last year. Now, it just stands to reason that the higher the production numbers, the greater the saturation, the more downward pressure that's going to put onto modern singles over time as booster boxes are open and more of those cards hit circulation. And in fact, that's exactly what we're seeing right now in the modern market. To add some context to this chart that you're seeing, I wanted to track some of the chase cards from both the Scarlet and Violet sets of Pokemon, as well as the Sword and Shield era of Pokemon, taking a look at the most expensive card from each one of those respective sets. Now what you're going to see is that there's 3 columns here. I tracked the price from 1 year ago, in January of 2023, 6 months ago, as well as the current price available on TCG Player. Now, I also used a color-coded system for easy viewing, and red represents a card that is depreciated by at least 10% over the last year. Yellow is used for cards that are relatively neutral, that have maybe bounced around a couple percentage points, but are still close to where they were. And then finally, green was used for cards that have increased in value by greater than 10% in that same time duration. Now, I don't want to talk about every single card individually here. It's a lot to go through. I'll let you guys look at it as I provide some commentary. But I think what we're seeing is a general pullback across the board for the vast majority of these chase cards. I also think what we're looking at is generally a best case scenario, since usually cards that are less popular have performed even worse than the main hit cards, the chase cards within the respective set. Having said that, we will see a couple of cards that have performed very well in the same time period, one of which was everybody's favorite, the Moonbreon, the Umbreon VMAX from Evolving Skies, which originally went from $472 just 1 year ago up to $543 today. Another one that's noteworthy is the Gengar VMAX from Fusion Strike, which is a beautiful card, I might add, that went from $167 up to $214 today. So some well-appreciating cards there, but overall, pretty much across the board, we're seeing lower prices. And I think that makes sense when we think about saturation, that with the large production numbers as more and more booster boxes and sealed products are being opened, those cards are hitting the market as singles, thus suppressing the prices a bit. Now again, it's admittedly an active market, and there's always going to be cards that perform well and don't perform well, but over this 1 year time span, for the last 21 sets that were released, there were only a couple of cards that have actually improved over 10% that have appreciated in 1 year's time. So if that's not a bit of a market squeeze, I don't know what is. Next, let's talk about modern booster boxes. Now this one presents sort of a modern day chicken versus the egg scenario, because one would expect that as more products were consumed, as more booster boxes were opened, that their scarcity would rise, and as a result, prices would increase for those boxes. However, the opposite dynamic is also true. As more of those boxes are opened and more of those singles hit the market, if those single prices drop, the contents of the box also become worth less. And so it's a matter of which one wins out, the increased supply and saturation of the individual cards in the boxes or the relative scarcity of the boxes themselves. Now, one of the things I've noticed is that boxes are all over the place, especially for tracking their prices over 1 year's time. But lately, we've seen far less volatility in price movement and appreciation from boxes than we have in the past, especially around the pandemic and shortly thereafter. And I think a large reason is just the print production numbers, just their sheer quantity of boxes available. That's maybe keeping that in check a little bit more. But let's take a look at some of the numbers. Now, just as before, I use the same metrics, the same color-coded system, and the same time duration for measuring the performance of booster boxes over the course of 1 calendar year. Now, I don't want to talk about every single booster box individually because there's a lot of nuance that goes into that, but I do want to share some overall observations that I have with you. The first of which is that not even the oldest sets from Sword and Shield era are immune to this situation of box prices remaining relatively stable in the last year. Now, that's not to say that these box prices aren't much higher than they were at release. Some of them have done incredibly well, especially if we're taking prices below MSRP, if you could buy wholesale from a distributor. But within the last year, a lot of them have stagnated or have even declined a little bit. In fact, 2 of them that have declined happen to be ETBs that don't have a regular booster box release, Champion's Path and Shining Fates, and so they might not be a great representation since it is a different type of product. Still, that is one observation that I've made is even the oldest sets that are no longer being reprinted are still relatively stable. In fact, that brings me to my second observation. There are only 3 boxes in the last 21 sets released that have appreciated more than 10% over the last calendar year. Those boxes include Chilling Reign, Evolving Skies, and Astral Radiance. And some of these boxes have actually done really well in that 1-year time span, but most have remained relatively stable or in some cases have lost a little bit of value over time. The reason I think this is interesting is there's a lot of talk out there about sealed product investing being the best option out there and beating out traditional investments like index funds or the S&P 500. But if most boxes aren't yielding 10% a year, I don't know if that's really the case anymore. It may have been during the pandemic or shortly thereafter, but given the sheer quantity, the massive saturation of sealed product on the market, maybe we're going to see more stability and more linear growth with some of these boxes rather than the wild volatile moves that we've seen in the past. Now, no disrespect to sealed box collectors and investors, because I do think boxes can still be successful if gone about in the right way, but I do feel that you need to prepare yourself for 2 inevitabilities. The first being a longer hold duration for those boxes to actually mature and depreciate into any meaningful returns. Second, I think you need to be prepared for more competition over profit margin, that those profit margins will likely get smaller and smaller than what we're used to seeing in such a short period of time, around the pandemic, immediately after the pandemic, partially because the lack of demand, but more so because of the mass production numbers and just the vast quantities of supply that are still out there waiting to be consumed in the market. But that's just my opinion. You guys will have to let me know what you think down in the comments below. Finally, let's talk about my favorite category, graded slabs. Now, for a quick history lesson, when collectibles were booming back in 2020 and 2021, maybe the early part of 2022, demand for grading skyrocketed, with consumers sending in record numbers of cards for grading. And in response to this, many of the grading companies massively expanded their workforce and their infrastructure in order to accommodate this new level of demand. However, once that demand was there, it really hasn't relented up until this day, creating a situation of saturation across the board for all types of graded cards. In fact, I pulled some numbers from GemRate, which is a website dedicated to tracking graded card statistics and data, and the numbers are actually pretty shocking here. In just the trading card category, not total collectibles, but just trading cards, the 4 major companies combined graded over 8 million cards in 2023. Now, what's even more shocking is when you look at the percentage change since 2022, which in its own right was a massive year for collectible grading. Well, 2023 smashed it out of the park, with every single company showing a 50% or greater percentage of increase from 2022. And these numbers seem not to be relenting. If we look at the month-by-month item increase to PSA, it's almost a linear graph going straight up. Now, this raises 2 important questions. First, what types of cards are being submitted? Are these legitimately valuable cards that people desire for their collections, or are they junk cards that nobody wants? Second of all, Who's buying these cards, and does the market have the adequate resources and the consumer demand to absorb all these newly graded cards from the market? There's been a lot of discussion in the last few years trying to define what a junk slab is, and for me personally, I've always thought about it as a card that has such little demand or such massive quantities that there's no added value to actually having that card encased and graded. And I think we might be seeing some of that now. Now, this is a bit speculative on my part, but this graph from PSA shows that submissions seem to be plateauing in late 2023 and early 2024, and perhaps that's just due to the types of cards that are being graded for the intent of resale aren't being sold as easily or as quickly, or for the same level of return as what they once were. And if that's the case, that might be what it takes to slow down the amount of cards being submitted for grading. To me, this all signals our current state of market saturation when it comes to graded cards. And I think there's no better indicator for this than the number of platforms that are actively selling or advertising mystery slabs. Now, you can get mystery slabs from auction lots, from regular purchases, from streaming sites. You can even buy mystery boxes filled with mystery slabs. And what that signals to me is that people don't legitimately want, and there is no authentic demand for the actual cards, but rather it relies upon the element of mystery and gambling in order to move those products. Cards that would otherwise be illiquid have become liquid simply for those other reasons. And I don't think that's a healthy way to approach the market. And once again, it's a supply side issue that there are so many cards available, and those cards need to move. People have to extract the money that they invested into them. That desperate times call for desperate measures. But that's just my opinion. You guys will have to let me know what you think. Is the graded card market saturated? I think so. Now, as I mentioned earlier, this argument is primarily about the supply side of the equation and not so much the demand side, but I did want to share one more chart with you that I found interesting. Now, this is a Google Trends chart when I searched Pokemon cards, and the first thing that you'll notice is the major spike back in 2020 during the pandemic when Pokemon cards were on everybody's radar. Since dropping, it stabilized out, but we saw another drop, and this is where it correlates with the broader economic market. Back in the summer of 2023, we saw a significant inflection point with the stock market, with the broader economic situation as people were speculating about recession, as interest rates were increasing, and at the same time, Pokemon card interest had also declined with it. Now, right around October, September of the same year, when things started to turn around and the stock market started moving in a positive direction, we saw a little bit of an uptick there with Pokemon cards as well. One of the overall takeaways, though, is regardless of the macroeconomic situation, I think we're seeing the reestablishment of demand and interest in Pokemon cards at still a healthy level, but obviously much more suppressed than where it was at its peak in 2020 and 2021. So we're establishing a new level of stability that's perhaps a little bit lower than what we've seen in recent times. Still strong market, but perhaps not as strong as before. The reason I bring this up is perhaps a bit speculative, and perhaps it's too pessimistic about the overall economic pressures on the consumer, but all the data that I've been exposed to, that I've been researching, suggests record levels of consumer debt at the same time that we have higher interest rates than we've seen in decades. Now, it's true that those interest rates may be dropping in 2024, and it might produce a bull effect on the overall economy, so it might be a moot point, but all I see is negative pressures on people's discretionary spending, and things like Pokemon cards and other luxury items are probably the first to suffer from those types of pressures. This brings me to the third point that I have on this chart, and that's just an idea of liquidity, that as people are put into a liquidity crunch and they need money to pay their bills, well, you're probably going to see less spending on Pokemon cards, and in some cases, people taking the assets that they do have and selling them into a down market because they need the money. If that's the case, that'll add further downward pressure on a situation where we already see a lot of saturation and some other types of downward pressure. So, again, these are just some of my observations and speculations. Again, I welcome your own opinions. Let me know what you think on the overall economy and more of the macroeconomic situation and how that might put the squeeze onto individual collectors and businesses. Anyway, guys, as I stated in the intro, the squeeze is here in 2024. And if you think about the Pokemon market as one of those hydraulic press videos, we've seen both a diminishing demand and a growing supply putting a lot of pressure on prices for just about everything. Whether you like modern singles, sealed product, or graded slabs, the saturation is real. But don't be afraid and don't be dismayed. this comes as a necessary step in establishing stability within the Pokemon market, something I think we've all been eager for ever since the pandemic, as values are once again established and there's a return to fundamentals to truly dictate the items that have rarity and scarcity to them versus the ones that are mass-produced and easily attainable. That's something I think is valuable. It's also worth noting that for enthusiasts and for collectors, this may be a buying opportunity as a lot of items are suppressed in values and as the greater market sentiment is affected. But that's another video for another day. Anyway, I'm Pokemon Classics, reminding you that the classics never go out of style. Stay well, everyone, and don't forget to have fun with collecting. That's why we're all here. We'll see y'all with the next video. Bye, everybody.